All right, everyone. Thank you for joining us for the next edition here of the Navigating the Coronavirus Economy series. My name is Tom DuFore, CEO of Big Sky Franchise Team, and this is part of our monthly sessions now that we do on what's happening in current franchise sales, current franchise marketing, what's going on in the greater wide world, and what's contributing. And so this has become a fan favorite from folks I've spoken to. So we've decided to do this once a month on new trends, new data, new information that's coming out. And so let's go ahead and take a review of some of the economic data and economic drivers. I can tell you from a high level perspective, things seem to be moving in a very good direction. And just from a qualitative standpoint, what we're seeing just from our clients, from things we're hearing and seeing just on a very small micro level, things seem to be jumping right now, surging in a very positive direction. So let's take a look at some macro data and see what we can uncover that might be contributing to that. And not only what's contributing to the current trend, but what we see coming down the pipeline here, maybe in 6 months or 12 months down the line. So I'm going to share my screen and we're going to start talking through a whole lot of different data points. So first and foremost, I wanted to start with what's going on in the GDP, the gross domestic product. I think that this is a really great chart to start with. So we have 2017, 2018, 2019, and 2020 all set up here. If we take a look at this, is the most recent data. We're not quite yet done with the first quarter in 2021 yet. But we take a look here. We see Q1 was declining. Then right when that coronavirus situation hit, Q2, big loss Q2, big gain Q3, and then we see modest growth in Q4. And what the and this data, by the way, is from the Bureau of Economic Analysis, part of the U.S. Department of Commerce. And so one of the things why the growth was slower than maybe other folks might have expected it to surge a little bit more, and what this report said is that there were several large states or cities that went back into some version of a lockdown type of thing. And so not all, but some did again. And so that slowed growth nationally as part of that. And I'm going to scroll down here to take a look at the initial estimate for real GDP growth. So the second estimate came out, it's a little more accurate, and it showed that 4.1% economic growth, which by any stretch of the imagination is, still solid growth. I mean, if you look up top here, the last 4 years, 4% is going to be at the top of what we looked at as fairly pretty stable there, anywhere from, it looks like, roughly 2 to maybe 4% growth per year. You're 1.5 to 2 4% growth. The other thing to take a look at is what's going on for the consumer price index. And so this is the PCE price index, but this is the oh gosh, I just forgot the exact thing. I'll scroll up. It's right here. It's the personal consumption expenditures price index. So basically, it's the consumer price index. And so it's going to show that it grew at a 1.6% rate, which means that inflation is staying relatively stable or flat, which is a good thing as things start to recover. That's always a concern as the government is printing stimulus checks and stimulus money. How is that going to impact inflation? You can't keep printing money forever, just basic economics on that. So the good news is right now prices are staying relatively stable, which is by and large a good thing. It's slightly increasing, but relatively stable. And then the PCE price index, excluding food and energy, and that's always a good determinant factor as well. It's 1.4%. So with energy and food pricing and without, it's still pretty consistent. Let's jump into the manufacturing segment and take a look at manufacturing. And this should be a huge, just, green light, let's go, get charged up kind of of a chart here. And the reason why is because this report, which has been going on for a very long time from PMI, this is the Purchasing Managers Index through the Institute of Supply Management. And they've been running this report for a very long time where they survey purchasing managers at manufacturers. Well, it registered at 60.8%. So it jumped up. And anything over 50% means it's growing. Anything over 50 means it's going positive. And this equals the highest reading since February 2018, which was 60 0.8%. The PMI which in February 2018 it registered 61.4% in May of 2004. So this since 2004, this is the third highest rating that the Purchasing Managers Index has ever had in 17 years. So to me, that's significant. So I think that's a really good indicator for where things are trending, because when manufacturers are buying, that means consumers are buying. That means consumer confidence generally is going in a good direction. This is a really good indicator here. So again, I'm not going to claim to be an economist. I'm not, because I'm not. In fact, my worst, probably some of my favorite courses, but challenging courses. But anyway, just some really interesting data there on the manufacturing side. Now, the PMI, or Purchasing Managers Index, also releases one for the services industry, and services dropped quite a bit in from January to February, and what we're showing here is it's at 55.3%. Now, that 55.3% still means that we're growing. Anything above that 50% is growing. And you see at the bottom of this chart here, it's hard to read these numbers, but it says 49.2% services overall economy break-even line. So when the economy is at or above this dotted line, it means the economy is positive. It's breaking even or above. So, that's why using this 50th percentile marker. So anything above that is still a positive sign. So you see it's kind of zigzagging a little bit, but it's up, okay? Which is good. We see the PMI started a third report recently for hospitals, the hospital and just the overall medical industry as health and wellness industry at large for medicine is such a huge percentage of the economy. And so you can see here that it was up as well at 57.5%. And the same rule apply here. If it's under that 50% there, or that 50th percentile, it's declining. So it's still growing. All right. Now, one of my favorite reports, this hasn't been updated in a little bit, but I really like to see how the U.S. retail traffic is trending. So if you look at this chart here, this was last updated February 19th. So, we're trending here almost 4 weeks behind. But at that time, look at this growth that was happening here for U.S. retail traffic. It was up 18.9%, and you see that things were trending as a whole up here. It was, down. Now, this 0% is a marker that they used for traffic right before the coronavirus pandemic hit. So this is kind of a baseline number before the pandemic. So anything above this line is above pre-pandemic levels. So you see that this surge is starting to trend. And so you say, okay, well, retail confidence, these things all seem to be trending in the right direction. Well, I think unless you've been hiding under a rock, what can we attribute that to? You might say, well, what are we attributing that to? And to me, I look at here, this is by worldometers.info. This is what I look at. It aggregates all of the information and data on the coronavirus daily coronavirus cases. And so this is in the United States. This was just pulled up here within the last half hour on their website. So this is as current as it gets. It shows March 11th right here for a number of new cases. And the blue line is a 7-day moving average. And I really like to look at the blue line, all the ups and downs and blips, different states and counties and such. They sometimes bulk upload data. So even though one day might surge, a lot of times you'll see a surge on a Monday or a Tuesday because they don't upload a lot of data over the weekend. And so it's like, oh, wow, how are there so many cases on this Monday or Tuesday? Well, it's probably not that way. It's just these bulk uploads from what I've gathered in researching this. So I like looking at that 7-day average, this blue line, and you see here from this early January, this kind of peak here in January 11th, you see it start declining, and this is right as vaccinations really started happening nationally, and you just see this consistent decline. And maybe it stayed a little flat there for a few days, but it continues to go down. So that's a good sign for all of us that, number one, clearly, the vaccine seems to be making an impact. Number two, I think coming into spring and warmer weather is probably going to help us as well. But we'll see how that goes. And then this is total daily deaths. I know it's a little morbid, but it is something worth noting, because cases are one thing, but how many people are dying from this that are getting it? And so we can see this brown line is the 7-day moving average as well. And you can see that since that similar time point, right around mid-January, we see that this slow decline here in deaths coming on. And so that, to me, at least this is my opinion, is good information, or is showing a good trend for, at this point now, several consecutive months in a row. So I think that's a really good thing for all of us, especially in business, as hopefully this means that the fear of getting ill and coronavirus and COVID-19 and so on subdues from the masses, and it starts to open up. Now, I will also show, we're going to jump into franchising here. So we're going to jump into the franchise report. And how is this impacting franchising? So when we take a look at now this is the franchiseinsights.com. This data was released. This is their February Startup Sentiment Index. They release this once a month. This is the most current data available. And what I really like here is, you see on this, it says Franchise Insights Startup Sentiment Index. This is a survey of people that are coming through their systems, and they ask these potential entrepreneurs, when are you thinking about opening up a business? And over 60% surveyed intend to start their business within the next 3 months. And to me, that's significant. So here it says, in February, entrepreneurs expressing intent to start or buy this month rose to a record of 31.2% of respondents, by far the highest on record, and indexing at 218% of January 2021. So you look back, if you index that against January 2021, look at how much of an increase that is from that time period. Startups planned for the next 2 to 3 months grew almost 29%. Small business startup sentiment index of individuals who have recently inquired about businesses for sale. This survey was conducted from February 25th to February 28th. So it's about 2 weeks ago, these folks were surveyed. I mean, this is as recent as it gets, folks. And look at this data here. I mean, the next 60% of the respondents said they want to plan to open in the next 3 months. This top green line, I'm going to try to zoom in a little bit here. This green line here, look at how large or how much higher that is than the next closest, which is 4 to 6 months from now. And then this kind of regular green color is 2 to 3 months from now. So you look at that surge of people who are expressing they want to open up now. It's significant. This is the same report, just in greater detail. And I did want to show just a couple of other points out of here. This is a good question here. Is now a good time to start a business? And agree or strongly agree, and they're combining these here. So this is the percentage of people who agree or strongly agree that now is a good time to start a business. And you see for the month of February here, it was just over 60%. You see the 60% line here. I mean, that's a really, really great indicator for us in terms of what businesses are thinking about and what's happening. I really like this monthly report that they put together. Are business conditions seen as getting better? Are they getting better? And so this green chart here on this chart means it's getting better or much better. Blue means it's about the same, and orange means it's worse or much worse. And so I really like, if you look at February, I'm going to zoom in a little bit. It's a little bit easier to see here. So you can see for February, it's this bar here. Look at this. The green bar again is that it's getting better or much better. And so 50% of the respondents said that business conditions are getting better or much better. 36.5% said it's about the same, and 13.5% said that it's worse or much worse. So we see this worse or much worse has been steadily kind of declining, dropping over the last 6 months. You look in July here where it really peaked here. And it's just kind of slowly been, you see you can kind of put a trend line. I'm trying to draw my cursor through. You can kind of see a trend line that's slowly declining as these are picking up. So I think that's a good thing for all of us to take note of. Franchise Insights also came out with another interesting report. I thought this was kind of neat. Even amid pandemic, many franchise prospects are top 6 figures in 2020 household income. So this is interesting, especially for those that require high net worth initial investment for their franchise opportunity, or for those companies that need franchisees that have cash on hand or whatever it might be. You can look at the percentage of millennials that have household income of 100,000 or greater. About just over 25% of millennials do. Gen Xers, 38.6% do. Baby boomers, 38.5%, and seniors before 1946 at 22.5% of people who inquired that have household income greater than that. So just some interesting information. One other thing I wanted to show you that came out here recently. This is the International Franchise Association 2021 Economic Outlook. And I think that this is really just a really good overview of what's happening in franchising. Now, I'm probably going to do a deeper dive separately on this, but I wanted to share some highlights of what's actually happening in franchising and what's being predicted. So in 2021, franchising is projected to open more than 26,000 locations, add nearly 800,000 new jobs, and contribute $477 billion to the U.S. GDP. So for those of you in franchising or thinking about franchising your company or thinking about maybe even buying a franchise, you are making a difference. So I just want to remind you of that. Even though you might say, well, it's just one franchise, or it's just one small business, or it's one small franchisor, you are making a difference. You add up to this. So keep that in mind. You're making an impact. I also want to point out here, this is the Franchise Economic Outlook. So in 2020, franchising lost approximately 20,000 franchises. And so you can see the trends here. Franchise business, total number of establishments, 2017, 18, 19, 2020. And you can see the change here. Okay, so it was decreased at 2.6% in 2020 over 2019. So we went from 773,000 establishments down to 753,000 establishments. Our projections, or the projections that the IFA is sharing through Fran data here in this report, is they're expecting to see a 3.5% increase in total number of establishments, increasing the number over 2019 to 780,000 total establishments. So you can see the change in employment, an increase of 10%, the output increase of 16.4% increase. I mean, look at the drop here in output from, certainly the lockdowns and shutdowns that were being enforced, down 14.9% with a big uptick this year. And GDP dropped pretty significantly, 5.7%, and expected to go up to 7%, which looks like it's going to top, based on these projections, to top 2019. So anyway, I think that this is a really interesting report. It's available at the International Franchise website, IFA, or excuse me, franchise.org, if you're interested in taking a look at that. But again, here reading this stat, in 2020, franchises lost approximately, try to zoom in here. Perfect timing, by the way. The battery in my mouse decided to die on us right now. So that's what happens when you're doing a live presentation. So in 2020, franchising lost approximately 20,000 establishments, pretty substantial. But the growth rate for this year for projections, and I know this is the same report we just looked at, but again, looking at the 3.5% growth, or looking to add this year, again, about that 26,000 or so establishments that are being projected for the year. Now, just zoom up. Maybe, there we go. So this is the projection for the year. Again, more than 26,000 franchises or locations to be added this year. So what does this mean to you if you're a franchisor looking to do this? Well, to me, it means that if you are a franchisor looking to add more locations, to expand, you got to be thinking about, okay, if we're projecting 26,000 franchises, how many of those are going to be yours? How many of those will be your brand? Is it 1? Is it 2? Is it 5? Is it 50? Is it 100? Which percentage share of those will be yours? So that's it for our session today. I hope that this was helpful in giving you an overview of where things are going. I would say, I'm an eternal optimist, so I'm always a glass is half full kind of a guy. But the data and information shared here should hopefully be uplifting as indicators that things are really appearing to trend in a positive direction at a macroeconomic standpoint, from GDP growth, manufacturing supply purchases to retail traffic, on down to the small business sentiment, and seeing that prospective small business owners are optimistic about wanting to open a business in the next 3 months, that they think now is a good time to do that. And then looking forward at what the International Franchise Association, which is focused on data and real numbers and trying to give real projections, not pie in the sky type numbers, but what is really expected or anticipated to happen this year for 2021. And I think seeing that 26,000 plus establishments are being forecasted is a reasonable number to expect. So with that being said, we'll go ahead and close this out, open up for any questions while we have a few participants here. Any questions from our participants, feel free to raise your hand. I can go ahead and unmute anyone if you'd like to ask a couple questions. Or you can use the chat box as well. Feel free to type in the chat box. Brian asked, is one establishment one location? That's a great question. So in the International Franchise Association report that they did with Fran Data, the establishment does mean one location or one unit. It's just one franchise is basically what they're saying. One new unit or territory. You might have a territory based franchise or a fixed location based franchise, but one franchise will be will be opening. So that's 26,000 individual units or franchise locations. Great question. Thank you. Well, thank you all for participating. I appreciate you being here. We will have another great edition of Navigating the Coronavirus Economy next week. Stay tuned. If you have not subscribed to our podcast, take a look at that. By the way, if you're looking for additional information, Multiply Your Success is our podcast at multiplyyoursuccesspodcast.com or at Apple Podcasts, Google, any of your favorite podcasts out there. Thanks for tuning in this afternoon. Have a great rest of the day and enjoy your weekend.